Well, good evening, ladies and gentlemen, and thank you for being with me today. It's good morning to our friends on the east coast of Australia. Good afternoon to those of you across the ditch in the Shaky Isles. And it's a beautiful day right here. In fact, I was speaking to someone from Boulder, Colorado yesterday. It's a beautiful day over there as well. So here we are. Now, how's the volume, folks? Can you all hear me okay? Just please type into the question box if you can hear me all right, or you need more volume. Let's see what we've got. Here we are. Oh, it's Mark, my mate. Hello, Mark. Volume is great. Thank you, my friend. So good to have you. And David from New Zealand is with us. Haven't seen you for a little while, David. Glad to have you back here, and I hope you're trading well and making all your clients a whole lot of money. If you're not, let me know and I'll bring you up to date. You should be making a ton of money if you understand what's happening at the Danielcode. Anyway, that's great having you with us. Both stalwarts, both good tutorial guys too. Wonderful. Okay, so let's see what is happening in the world today. Time and tides rule your life, whether you know it or not. And sometime next week, you're going to get a document that I've just written. Oh, good. David says trading's going very well. He's a Danielcode tutorial guy from New Zealand that manages money for others. Well done, my friend. The question of your profitability, if you're not making money, it's because you don't understand the Danielcode. I am an attorney by training, and I'm actually an elderly attorney these days, so all attorneys are skeptical, and elderly ones are even more skeptical. So I don't tell you anything at these webinars that I can't prove, and you should be able to prove it too. We've got everything here to prove for yourself everything you need to know. The only time you have to be worried about your trading, I know a lot of you have anxiety about trading, and you shouldn't have, because the markets exist to give you wealth and happiness. That's what they're there for. And once you know how to talk to markets and listen to them talking to you, you're in a different class. And the whole point of saying that I'm an elderly attorney was that I'm also prone to understatement. I'm not a salesman. I don't beat the drum. But honestly, we should be beating the drum. How good is the Danielcode? Honestly, beyond anything I've ever seen in my life. And I've been in this business a long time. I've come across a whole lot of people in this business, and I've never seen anything that compares with it. So make it this simple. If you're not making money trading, let me know. I will turn you into a money machine. That simple. Okay, let's see what else we've got here. And we're going to see if we can get this slide to change. Here it is. Look at this. Now, forecasting. I'm not going to take all day on this, but I find it extremely interesting. We've done a whole lot of webinars on time cycle forecasting this year. Do go back through them if you haven't seen them, folks, at the website www.thedanielcode.com. There's a separate link, videos, and if you go there, you'll see that Terry's reorganized them all now. They're all in their list by year, by date, and there's over 40,000 members charts there that I've created by hand since the website went public in 2007. And you'll be hard-pressed to find a market that's ever turned anywhere except at its Danielcode number. Have a look at this. This is a 12-day chart of the S&P. This is the S&P E-mini, which is now, there's no S&P big contract anymore. But, excuse me, For those of you who are interested in this stuff, and you should be interested because it's absolutely brilliant, have a look at this. This is the 59-day cycle on a 12-day chart. That means that every bar on that chart is 12 trading days. And that allows you to bring in more data that you can't normally see on your screen with a daily chart. It's just too much. It runs off the edge. Have a look at this. I've taken this from the low after the dot-com crash. Look what it's given you. 413 cycles of 59 gave you the 2022 high to the bar. To the bar. Why is that so strange? Well, that's phenomenal. 20 years. Crash low to blow off top. More than that, you all know that we have almost a third of all bars are missing from these charts because we have 104 weekends that are not on this chart, and we have 12, maybe 13. I haven't checked that up, but we've had a new holiday this year, Juneteenth. Add those on, and you'll find that you're approaching 30. I think it's pretty close to 30%. Close enough anyway to say that there's a third of these bars are not there. So these things shouldn't happen. You shouldn't have time cycles expiring exactly to the bar, but they do all the time, again and again and again, and it's quite extraordinary, and I love it. But this is how we start our forecasting. Start off here. We're going to create the forecast. We're going to start off with what we know. If this chart doesn't look familiar to you, go back through our recent webinars this year. You'll see there's a number of them. So one of them is where this particular chart comes from. This is a 24-day chart. But this is that whole, excuse me, cycle of time, times and a half, running from the 2007 high and the 2009 low, respectively, straight into these two extraordinary corrections, one of which is the COVID flash crash, 23, 24 days down, and technically into a bear market at lows, quite extraordinary before it recovered and rallied up. And these cycles gave us that low exactly, and also the previous low, the 2018 low. And since then, of course, it's given us the all-time high in the S&P and the corrective low coming down from the 2022 high. So that's what we know about. That's what we have, and we can use that, but we have to make particular mention of those two corrections, the September 2018 to December 2018 correction and the 2020 COVID flash crash, because they were so accurately predicted from the 2007 to 2009 high and low that they've become the bulwarks of this market. They're the new starting points for our time cycles, and it'll move on. There'll be something else soon. It might even be the present high and low of this move from 2022 down to October. That's the wrong year. That's going to be 23, I'm pretty sure. Let's have a look. And when we look at that chart, look at the first thing that pops out at you. We know from the previous work that I've been showing you that 59 cycle is dominating the 24-day chart. This is the 6-day chart. Look at this cycle from these two very, very important corrective moves. High to high, 59 cycle, 59 lots of 6-day bars. More proof that 59 is the dominant cycle for this market, which is the S&P. And of course, if you're interested in 59, you have to be interested in 29 because it's and half. In the same way as you have to be interested in 118, which is times, plural. Now, all I've done here is put on some repeating measurements of 29 days. And it's fine to do that because given the number of bars that are not on these charts, the numbers after the decimal point simply don't matter. However, when you start multiplying out these time periods, they do matter. So if you're simply taking 29 without a decimal point, you're getting 58 at 2 times. This graph shows it as 1 times. That's good. It doesn't start at the beginning. That's just the way Trade Navigator made it. But that's actually twice. Really, the correct number is 29.5 or 29.6. Doesn't matter. 29.6 is Daniel's code for time. And if you'd rather have a straight engineering answer, that is also 29.5 is the length of a synodic month. That's the length of an average calendar month. 12 calendar months, the average length of each of them. We have 30s, 31s, 28, and 29 sometimes, but the average length of each of those 12 months is 29.5. So you can take either of those, and they're identical because the variance is 1/10 of 1 point. And once you recognize that you've got an inbuilt potential error of 1 in 3, because that's the number of bars that are not on here, you can see that there's really no difference at all. They're the same thing, except when you start these long multiples, the half becomes important. So what we found here is we've put some highlight on those two particular retracement sequences, which are so important. And what we're doing now, I'll just wait for this chart to change for you, which it's done, is we're simply taking the basic cycles, 29 and 59 in particular, from the swing high of September 2018, which is a couple of periods. This is a 6-day chart. It's a couple of periods before the big move down, into the low of December 2018, and then the February 2020 high, the COVID flash crash, into March 2020. We've simply taken the highs and lows of that, and we've just slapped this 29 cycle on them. And that's giving us these small little red diamonds, which are setup bars. It's funny how this works. They're the initial setup bar, and then you take your time cycle counting from those setup bars, and we'll get some big diamonds. Have a look at this. That simple technique, and we haven't gone very far into it. We've only used the first 2 or 3 or 4 setup bars, but it's given us 5.6 points on this chart. 1, 2, 3, 4, 5, 6 points on this chart that are really important. The low before the high, the all-time high, 1 bar past it, another setting will move it right back onto that high bar. The first big correction down, the all-time, well, not the all-time, the low of this whole move down from the 2022 high, and the next 2 periods. And they've got a big diamond on them as well as the arrow to show you that there is more than 1 time cycle expiring there. So if you've got 2 time cycles, does it make it more important? Does it make the move stronger? Yes, it does. And if you look carefully, you'll see that we're sitting on one of those multiple expiring time cycles where we are today in this market. We've been on a buy for the last 3 days. Been very nice. We have a sell signal in the equities valid for Friday. And we have the next minor vibration in equities is either Friday or Monday. So keep a close eye on that. It looks pretty nice. And I think I'll have given you the number it needed to hold. And I haven't done that for today with the new data in, but I will do that. I'll do an update to the chart that's on the website telling you much more detail about the S&P which I know a lot of people are interested in the NASDAQ. The S&P is the best forecasting medium because it's broad and it's much more widely spread. NASDAQ now is a celebration of the big tech. And they're just so dominant that 5 or 6 of those particular markets they do, in fact, they dominate entirely what is happening in the NASDAQ. So the S&P gets you a better view. So there you are, look at that. Simple enough to do. You can do that on any chart that you have. Use 29 and 59 to start with. Occasionally you'll see 70 come in. We call 70 the heathen cycle. There's nothing heathen about it at all. It just comes from a different part of Daniel's code. And it has particular fascination with all things European. The DAX, Bunds, anything with a European flavor, you'll see the 70 cycle in there working. So just bear that in mind. But for almost all of these markets, gold, silver, all the grains, they all run on 29.6 and 59.3. And don't worry about the decimal point. Just use 29 and 58. But be aware that as these numbers go out, the half starts to make a difference. So you can see we've got here at 3 times, we've got 116, whereas if you were allowing for the decimal point of 0.5 or 0.6 respectively, you'd have 118. Okay, so look at that. Pretty amazing, isn't it? So we have got at least an intermediate top in place for this move up, which would be very disappointing for the bulls because they've done a marvelous job. Look at this thing when it's running up, and think about what Frank DB has said about future price moves. Not looking so silly now, is it? Quite extraordinary. Okay, so we're going to start talking again about trends, and trends are caused by a turn. All trends start and end with a turn. That's why they're important. And that's why we're so slavishly fascinated and following and forecasting turns, because they're your lifeblood. So remember that we've talked recently about target recognition. It is so important if you have target recognition because it has implications for both time and price. On the simplest basis, as you're going to see in the charts coming up, start with target recognition. You're more than halfway there. Add in some trading technique, which I'm going to highlight as we go through here. And how good should it be? It should be the best program in the world. If it's not, either it's been kept a big secret from me that there's something better, or you're doing something wrong. And if you're doing something wrong, let me know. I'll be happy to teach you, get you up to speed as an elite trader, which is it's a wonderful life, I assure you. Have a look at this. This is a British pound USD. This is cable, they call it. This is a Forex pair. And what I wanted to show you here is you can see I put a line right across there. And I've talked to you about this several times before, but it's vitally important. And you need to really get up to speed on it. And that's flip me. And what's happening here is that the Danielcode trade signals are so strong that a failure creates a whole new entry. In other words, we had a TO3 plus buy signal, and that will be a Tuesday. And then the failure point for that was 2 ticks below the inside bar or 2 ticks below the bar before the inside bar, depending on whether you're trading inside bars or not. But that where your protective stop on the long position is for Tuesday. If that is taken out within 3 days, that's a flip me. That's a failure. It's telling you there's something wrong with your position. And if there's something wrong, you need to do something about it. And what do you need to do? You need to do a stop and reverse and make sure you get back with the apparent trend. And these flip me's are happening all the time. And they're a vital tool in your trading. Here's the next one. This is New Zealand US dollar, and we had a TO3 plus buy signal on that inside bar there, which was elected the next day, and the protective stop for that on the long position was either where I put it at the low of the bar before the inside bar, or the low of the inside bar. Both are valid, and if that's taken out in the next 3 days after the up trade, the buy, the TO3 plus buy signal, that trade's elected the next day, start your count. 1 day, immediately breaks the protective stop positioning, or it could have been higher just below the inside bar. That's telling you there's something wrong with your trade and you need to do something about it. And what you need to do about it is get short. And you can see you get your money back with interest straight away. Here is a different chart to look at. It's still got the US dollar in it. So this is a correlated market. Have a look what happens with the correlations. We think that this Danielcode target recognition is valid for 2 days, sometimes 3 days. Have a look what's happened here. The TO3 and blue line buy signal came on target recognition at the 13147 blue line. Look what happens then. 1 bar up, 1 bar down. Look where that down bar stopped, right at the next blue line support, 13135, almost exactly. The next day, the market's totally confused, but there are enough people there who understand that that's a buy signal, that it takes off, gets long, and you make some nice money. Look how precise these markets are, not just this market, all markets. They're hitting these Danielcode trading targets. I know I've been hitting it a lot to you lately and probably driving you mad. It is the basis of everything, folks. And you don't have to know much about mathematics. If you can count forward and back to 3, you can do this. It's that simple, particularly with these members charts. They tell you not only where the market is, but where it's going to go. And you can see this whole run up has just been fixated on the next 2 red line numbers. Extraordinary stuff. And that's your benefit. Here's a new idea for you that I'm not sure many of you would have thought about yet. These Danielcode signals are created on the theoretical basis that the market is in perfect balance. In other words, the market's in balance. We see the signal creation coming up. We see the market having target recognition. We see it being in an overbought or oversold position on a number of time frames. We might even look at a momentum indicator unless we're trading time, in which case we don't look at anything but the time cycles. But sometimes, as I say, this assumes the market is in balance. And when we get a signal, we don't have the arrogance or hubris to say, I'm going to sell that high. We wait and we say, we think that this market's met all the requirements to make a turn. We now want to see that the market agrees with us. We're very good friends with the market. We want to be doing what the market wants to do, and the market needs to understand what is the information it's been seeing. But the only thing, as I said, you need to be neurotic about is a consolidating market. This is a lovely trending market, whoosh, 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 and it's just running off the blue lines, as you can see. Tuesday hit the blue line there at 144.219 with deadly accuracy. Look at this red line, the red bar, the little inside bar before it. That had a TO3 sell signal. Here's the hard part for you to get your head around. A failed sell signal is a new buy signal, and a failed buy signal is a new sell signal. Okay? I haven't told you about this before because I'm trying to get your heads around flip me. But this is a advanced form of flip me. These signals are so powerful that they're telling you something. They're telling you everything there is about the market. And if you've got a signal that fails, it's telling you the market wasn't in balance. In fact, a new force has come into the market. and it's that force which is making your trade now, because if you knew that, you'd be long 2 ticks above the inside bar or 2 ticks above the last bar that was not itself an inside bar. Depends whether you've done a tutorial or not, how aggressively you're trading, I guess. But there's a new one for you to think about, that a failed sell signal is a new buy signal, and a failed buy signal is a new sell signal. And other than in a market consolidation, you should be in this market all the time. Being in the market, it means you're working every day, you're making money every day. These ideas of, oh, that's overtrading, that's rubbish. It's overtrading if you don't know what you're doing. If you do know what you're doing, which Danielcode does, and you should be in the market all the time. Have a look at this little beauty here. This is crude oil, and it gave a TO3 plus buy signal. It had support there. It had blue line. It had target recognition. That's no longer on the chart because they got updated. But there was your TO3. But look where this thing turned. It runs down, hits the 67.05 red line there, stops as if it was shot, tiptoes through the blue line, which was support 3 days previously, 67.29, held it for 2 days after that day. What happened here? Skips through the blue line, hits the next red line, turns like it was shot, stops that run down straight away, sends it off upwards into our buy signals. Very, very nice stuff. Okay. This is the S&P. And you can see that the TO3 sell signal on the left, towards the left of your page, after that big bar up, it had about a 3-4 day counter trend, little simple zigzag there. But you had a TO3 sell signal on the key reversal bar. That means your protective stop on that short trade, which was elected, is 2 ticks below, 2 ticks above the high of that bar, and that's the flip me point. And if you're aware of that, you got long when the market went through. You're not sitting there saying, oh, gee, I've lost money. Yes, you lost a little bit of money there, not much because the trade was against the apparent trend, so you had a discretionary trailing stop if you knew about them, which tutorial guys do, and you should. And little key reversal bar up, off it goes straight through the flip me point. Get long. There's $5,000 in the upside of that trade, and perfect target recognition at the red line up the top, into a sell with a big key reversal bar gave that TO3 plus sell signal, and down it goes, another 2,500, and then the present rally into about 1,400 at the close today. Now, these charts, folks, were done about 3 o'clock this morning. My 3 o'clock this morning. A bit later, I finished them up about 5 this morning, say 3 o'clock New York time. So the close on these bars is not correct. Okay, just check on your own data with your end of day data. So this is the close of these bars, which you're going to see is vital in some cases. Was a few hours early before the close. Look at this for gold. We're going to have to think a bit about gold. We had a TO3 buy signal for Wednesday. It was not elected. The market went running down further, hit the 1899 blue line, reversed and set up a key reversal bar. A key reversal bar is a bar. This is a buying key reversal bar. It opens within the range of the previous bar, makes a new low for the move, then reverses and closes above its own open, which it's done, and above the previous day's close, which looks to me like it's done also. And key reversal bars can often, in fact, be short-term directional indicators. And we have a buy signal for gold today. We had it for today, and it'll be valid for tomorrow as well. Very important stuff. Look at that. I've got a bit more stuff in gold to talk to you about because it's at a very worrying level. And one of the things, I know a lot of you are really keen gold traders. one of the things that we notice, and I've shown you many times, is that the US dollar index and gold are usually in an inverse relationship. In other words, if the dollar goes up, gold goes down, and vice versa. Gold goes down, the dollar goes up. That inverse relationship lasts for better than 80% of the time. And I've said before that when that relationship breaks down, it's always in favor of gold. That's a historical view. Well, have a look here. This relationship's broken down. I've shown you the little light pink triangles there showing you the obvious correlation, which you can see. Gold goes down, US dollar index goes up. Before that, you can see that massive great balloon then going back into the narrow neck before the start of it. Look what's happened here now. Just in the last 1, 2, 3, 4, 5, 6 bars, dollar index is down. That should be telling you that gold, I've got this upside down, dollar index is up. That's telling you that gold should be down. But we're not getting that inverse relationship that we had that long pull down in gold. And in that period, the US dollar was going down with it. Now that the dollar's rallied in the last 1, 2, 3, 4, only 5 days, really, maybe 7, what's it going to do to gold? Well, that's just the last thing anyone wanted to see who was a gold bull, is strengthen the dollar. And that's what you got. But can you see how this last run down in gold, it just went straight down? Still going. It's on that, running on that trend line, running down at the close. Not good news for gold. And gold's a worry because it's at a critical point. This is from the fourth seal. If you're interested in gold long term, you should be subscribed to the fourth seal. It's prepared by a young man called Frank D.B., who did a Danielcode tutorial in Taupo back in 2011. And that was actually the first tutorial where I started to talk about time. And he took it up, and he's just infatuated, besotted with it. And in the 10 years since then, of course, now 13 years, it's not 12 anyway, he's become a very, very good trader, and he also trades the physical bullion as well. But this is his 6-day chart of gold, and it's got key support right there where it is now. That's crucial support. And in fact, you can read his comment for this week. This new charts and comments are posted every Monday, and it's wonderful stuff. But we've got terribly important support in gold right now, and the swing low, as he says, defines the fail point for the uptrend, and it needs to hold where it is. That's very, very important. Okay, let's have a look at it. We move on. This is the Russell. Interesting, unusual. It had a Danielcode target recognition, and then a couple of days correction, and then 2 more high bars, neither of which themselves had target recognition. But you already had Danielcode target recognition. That's why I put it on the chart so everyone could see it. So no surprise when the Russell turned down, and we had a correlated sell signal. There were sell signals for the S&P and the NASDAQ. And all of these equities, Russell, Dow, S&P, and NASDAQ, and Germany's DAX, are so highly correlated that a signal in any of them can be traded in any other, provided the trade is elected. Okay, so you can take signals from the Dow, trade them in the Russell. Signals from S&P, trade them in the NASDAQ. Directionally, these markets are so highly correlated that it's quite safe to do that. And by the by, the correlated trade that's not the obvious one, it has not created the signal itself, but it's got a sleeping signal, if you like, because of the correlation. They do better than the actual market on which the signal's created, because it's less obvious and there are fewer people in it. And that little bit of contrarianism is alive and well all the time in financial markets. This is soybeans, and there must have been something important. Here we are. Have a look at this flip me entry here, where the line is going right across. What that is the couple of ticks above the high of a new entry, and the sell signal was elected and then turned around and took out the high of the setup bar. In other words, it was an outside bar. In other words, an outside bar has a higher high and a lower low than the previous bar, but it was the outside bar on a new entry where we got short. And if we get an outside bar on the day of a new entry, we must stop and reverse. But as well as that, that particular point where the stop and reverse was also a flip me entry. And if you had that sorted out, you made a pretty easy 7,000 straight up into the high that hit the blue line and gave you a TO3 sell signal and another 33,800 on the way down into today's close. $11,000 simply by knowing about flip me and following the Danielcode signals. Here's another one. This is our little beauty. This is sugar. And Trade Navigator, as you might know, have been having a terrible time. They've had to switch to a new provider of data, and it's really been a massive job and lots of problems getting that into their new, their own charting software package, which we use. And one of the byproducts of that is that they haven't been giving us intraday data on any of the ICE market. ICE is the Intercontinental Exchange, and ICE it's called, and the futures that trade on that market have not had intraday data from Trade Navigator. So that also applied this morning at 3 p.m. US time when I was doing these charts for you. We didn't have a new bar for today, but you can see how beautifully these markets, all of them, are just tracking their Danielcode numbers. Wednesday's low was right on that blue line, wasn't it? The low was, here we are, the low was 22.40. The blue line was at 22.38. 2 ticks variance. That's it. 2 ticks variance. The little red line in there was also at 22.38. Today the market continued on that sell signal. All of this is running off a TO3 sell signal right from the high, as you can see. Today's bar went down exactly into the next blue line, which was 22.05. What was the close today? 22.08, 3 ticks variance. Now, what this market is doing, like all markets, but this one makes it nice and obvious, it is saying to you, I know these numbers and I'm tracking them. And we expect to get that sort of target recognition every 2 or 3 days at the worst. Often, like here, they're day after day after day, exactly at the various lines that support them. So that's actually what the market is saying to you is, I know these numbers and I'm tracking them. And markets talk to you. Markets have always been talking to you. But until we got the Danielcode, we didn't have the tools to understand them. Now we do. Look at this. I know these numbers and I'm talking to you. And if you don't get target recognition within 2 or at least 3 days, then the market is saying to you, not these ratios, try another one. And there's usually no more than 2 dominant cycles working in a particular market at the time. So there was a beautiful, beautiful trade in sugar, which is still going on. It's worth 4,100 now, and perfect target recognition. Oversold everywhere. Divergent momentum, probably going to rally. Let's move on. This is silver. One of these retracement lines, the red lines and the black lines, are retracements of an existing trend. And these black lines, famous Danielcode black lines, they're the 89% retracement. And they're the last level of support or resistance for any market. And it was famous, these lines, that Akshay, who's often with us, and you hear me talking to him, is a broker and a trader in Mumbai in India. And his firm was on a Bloomberg terminal. And he laughed like hell when I first released Danielcode, and this black line is so deadly. One of the Bloomberg reps came to see him no more than 2 months after I'd released the Danielcode and said, "Oh, we've come up with this wonderful new, multiply this ratio by that ratio, take away your mother's age, basically. That'll give you something very, very close to the 89% line." So Bloomberg have done what all tech people do. They like to borrow things, don't they? Yes. So the black line has another significance, which you're going to see when we get to particularly on the US T-bond chart. A close above or below the black line throws the possibilities or probabilities very strongly in favor of the swing being taken out. Okay? If we could get a close below one of those black lines, it would put the possibilities at the 90% plus level that the swing low would be taken out. And that's not so important here. But look at this. This is US T-bonds. And it's been a horror of late. We've just been stood aside for days, if not weeks. It's just been one great long consolidation. And bear in mind that breakout bar appears to be a breakout bar on Monday, was it? Is not, let me find that, here it is. Yeah, that was Monday, is not a breakout bar at all. A proper breakout bar from a consolidation actually requires a close outside the range of the consolidation. So you can put a horizontal line on that high for Monday, another one on the low, which is not the low, it's the outside bar after the swing low. And what you need to have a confirmed breakout is a close outside that range, and we don't have it. Have a look where this market closed today. This chart you're looking at is not accurate because market still had a few hours to run. But I can tell you that close was at 126 caret 11, 126 caret 11. And look at the black line, 126 caret 05. 6 ticks lower, 126 caret 05. So it certainly had its chance to break on a closing basis, break the black line if it wanted to today. There was a huge move in interest rates with the Fed talk fest, etc. And this market is poised, and if you get a close below 126.05, that raises the probabilities that its low, which is the low of its swing low, is going to be itself there, isn't it? The main low, or the first low after the push down low, was on Thursday, June the 8th, some time ago. But that means that straight away, if it get a close below the black lines, you get a 90% plus chance that the swing low 1 or 2 will be taken out. That has some real implications. So remember that about the black lines. They are wonderful little forecasters and predictors. As I say, it doesn't, excuse me, it doesn't matter greatly on these daily charts. But some of you will remember that when gold was heading towards a new all-time high some months ago, we had a break. We had a black line chart there, and I said, if you get a daily close above that black line, it means the swing's going to be taken out with a 92% plus probability, and it was. And that trade there was worth about $38,000 per one contract. Very nice. So be really attentive to these black lines. As I say, no great imprimatur on the daily charts. It's certainly not the way we trade, but be aware of them. Sometimes they can set you up with a wonderful trading opportunity. So that'll have to be the next move for that. So Danielcode trading tutorial. We're always trying to get you trained in Danielcode time and price trading. And it's for your benefit. Once you know how to trade properly, your life will change. Your life will be changed, I promise you. And we've got a whole lot of people, most of them are here today, that have done the tutorial, and the most common comment I get after they've done the tutorials, they say, it changed my life. It's a big statement, isn't it? So we're always trying to get these tutorials to you, and we're aware with the price of cost of living everywhere, money's tight. So what I'm going to do is I'm going to take a small group of people to do this tutorial. I haven't done this before, and I can take up to 6, and we're going to start on Wednesday of next week. And because I'm taking a group, I can offer you a $1,000 discount, and it will require payment of $4,500 before we start, and the balance of $2,000 30 days later. No interest, and we start on Wednesday, 5th July at 8:30 p.m. US Eastern Time. So these teachings will be through GoToMeeting. The first 4 sessions will cover the teaching of trading price and time separately and setting up your DC Danielcode time and price charts. You will not be speaking at these sessions. They are just a monologue as I take you through with the charts. And we start on day 1 is you will discover the Danielcode. You know, there's 2 types of knowledge around. There's one that I learned this somewhere from a book or perhaps from a lecture. I believe it's authoritative. That's how I believe that's how you learn most things, isn't it? When you're a kid, it's your parents trying to make sure the school teaches you your ABC and your math, and you remember it. You memorize lots of it. Big parts of it. So that's one form of knowledge. A much, much better form of knowledge is I found this for myself. If you find it, in other words, if you go through the process I went through, and it took me about 6 or 7 years, full time, to find the Danielcode, it's so easy now that we know it, but you're going to have the same journey in about 90 minutes. You will find every part of the Danielcode yourself, and the mathematics involved. I will do it all for you, but if you wanted to check it yourself, you just need a very simple calculator. It's just adding, subtracting, and dividing, and you'll be able to find all those functions on a very basic calculator. So that's what we're going to do Wednesday, Thursday, Friday. Next week, I'm going to teach you how to create and trade price and time separately, and that will all be done as a group. You don't have to attend because we record all of our sessions and we put them on our secure server, and we'll send you the link the next day. And that link is private just for you. Don't share it, I ask. And you will be able to see the whole of that lesson at any time that suits you. You're not tied to the US time frame. So the next week, we'll get through those first 3 teaching lessons as a group. And the next week, Monday, Tuesday, and Wednesday, 10th to 13th July, they will all be one-on-one sessions with me. And that is with each of you individually. You can ask your questions. You can talk about any material you've seen and didn't understand, and we'll get you paper trading then. And I know some people hate paper trading, but the reality is the people who do the most paper trading make the best traders. Someone like Frank DB, who came to me and said, I've never traded, I've never even seen a financial chart, I don't read the financial papers. It's turned out to be one of the very, very best traders we've ever had. And you can do the same thing. So you haven't got a whole lot of time. You need to be signed up, invoiced, and ready to roll on Wednesday next week. And that's at 8:30 US time. So we'll be... of course, if you want to do a private one-on-one tutorial at the normal price, that continues. They're available. Just let me know if that's your preference. jneedham@thedanielcode.com, and we'll get you set up for that. So as I say here, we record each session, place it on our secure server. Your private copy will be emailed the next day. And this is the schedule. Day one, we're going to find the Daniel code for yourself. You are going to discover it. You are going to see how to create every one of the Daniel code ratios. On day two, you're going to learn to create and trade daily price bars using that knowledge that you've just gained from day one in breaking Daniel's code. Day three, you're going to learn to create and trade the Daniel code time charts. This is the big chihuahua. How good is this? Honestly, it's the best I've ever seen. It's the best I've ever heard of. If there is a better trading program out there, comparable, and it's pretty simple. It's based on daily charts, and you will never risk more than one, maybe very occasionally 1.5 ATR, which stands for average true range, and we take that as the average over at least a 29-day period. So it's pretty conservative. And you can see how we're setting all this out for you. And times, if you happen to be European or in Asia, that time won't suit you, but we'll just work. I do these tutorials at any time that suits the client. As long as I'm awake, I have to have some little period of sleep during the night, and we've had many European, Indian, and Asian clients over the years, and it all works out quite well. So please, if there's something you'd like to discuss about the tutorial before you're ready to commit, send me an email, jneedham@thedanielcode.com. jneedham@thedanielcode.com. If you require, I'd be happy to call you so we can have a chat on the phone. Okay, so we're going to make some changes to members charts. And the first one we're going to do is we're going to get rid of DAX from the members charts. Very few people trade it, which is a shame because it's a brilliant market. But all we're doing is dropping it out of members charts. We'll still give you the signals. I'll still run the orders on it, but it will disappear from the members charts, which are so important. And I want to replace it with wheat. And for the members charts, I'm going to use the code W2, which is the combined sessions of wheat. Now, you have to trade ZW, you say ZW in America, I say ZW, which is the electronic contract for wheat. And the difference between them is you'll see these numbers with the number 1, 2, or 3 after the code for these charts. On the old board of trade, these are all board of trade charts. And the problem that stopped the board of trade merging with the CME many years earlier than it actually happened was simply that the brokers from board of trade were not willing to give up the way they quoted prices at markets, and they used this tool that looks like a little arrowhead. It's actually, the proper name for that is a carrot, and all of the grains are old board of trade markets. Bonds, UST bonds, they're old board of trade markets, and they still run on the rule of eighths. So wheat is such a great market. I want to get that in. Now, what actually happened with the board of trade back in the day, institutions don't trade like us. What they do is they make a decision every day. If they have a signal, they want to enter the market, they'll tell their broker to buy or sell MOC, market on close. And what was happening there was a whole lot of brokers trying to get pretty substantial orders filled in the last few seconds or minutes of trading. And of course, some did better than others, not through skill, through happenstance. But that caused issues. You know, the usual, oh, Fred got a better fill than me, you're a lousy broker. I'll get another broker. And the Board of Trade said, we're not going to put up with that. So they said, we create a new chart and it'll have the number 2 after it. So there's 3 versions of it. One has a number 1 after it, one has a number 2, one has a number 3. I confirm, or rather I repeat, we're only talking about the old Board of Trade charts, but there's a lot of them, and grains, agricultural products, what have you. If it has the number 1 after it, that's the day session only, what used to be called RTH, or regular trading hours. If it has the number 1 after it, that's what chart you're looking at. What the Board of Trade did to get around this problem of everyone trying to enter MOC at the same price is they said, we're going to monitor the last 10 minutes of trading before the last 10 minutes of trading. In other words, close minus 20 minutes to close minus 10 minutes. That 10 minutes of trading is monitored by the exchange, and they take the close, the average close in that session, and they declare that to be settlement price. So it doesn't actually matter where the market last traded. They take that setting there and they say that's the settlement price, and everybody gets exactly the same price on that chart. And that solved a whole lot of problems. The one that has a number 3 after it trades just the same as the pure electronic contract, which is ZW. And what you get with that market, you get the close is literally the last trade that goes through a nanosecond before the market closes. So I will never use an electric chart if I can find a chart with a 2 after it. I prefer settlement price, and there's often quite a difference between settlement price and the close of the electronic market. And if you look at the close, that's the close that the big boys have. That's, you know, God is with the big battalions, and so am I. I don't want to be tracking anything that happens on the close of ZW because that's the day traders. And day traders, leave me alone. I don't want any part of it. Okay, so that's what we're going to do starting on Monday. You'll have a new chart for wheat. If you haven't traded wheat, I do urge you to look at a very, very good trading market. And as well as that, I'd like to replace copper with something of more interest to you. I mean, we've got the 3 precious metals. We've got gold, silver, and copper. I don't want to get rid of silver because it's such a good confirming agent for gold. But you know, we've got 3 precious metals. There might be something else that's of more interest to you. So just let me know. Send me an email, please, jane@Danielcode.com. And for all these things that I'm telling you, go to the chart archives. You can see this here. That's the top of our website. And you can see, looking across, you can find the link. It's the gold link in the center, 2 major lines or 3 individual lines from the bottom. And it says chart archives. Click on that. You'll see it'll open up by year. You can go straight to any year you're interested in. And as I say, you'll be hard-pressed to find any market that has turned anywhere except after target recognition, which we've talked about a bit today as well. So that's going to nearly wrap us up for the day, folks. Remember, the business of trading futures is the business of making money. That's why you do it, and that's how we measure our performance. If you haven't already, please help yourself to a free trial of everything at the Danielcode website. I particularly suggest you pay attention to Frank DB's commentary on the 4th seal, it's amazing. It's amazing. Any issues, if you already had a free trial, the website will likely remember you and not want to give you another one. In that case, just contact Terry at support@thedanielcode.com. He'll get that sorted out quick smart. And here, finally, is our disclaimer. It is very, very easy to lose money trading if you don't know what you're doing, in the same way as it is very, very easy to make money, and a great deal of money, if you do know what you're doing. So I ask you to read this disclaimer. Be skeptical. Don't risk real money until you are confident you know how to trade. If you don't, I will be happy to teach you. And that, folks, is all for us today. I thank you for being with us. I've enjoyed that so much, and I hope you have too. And I think that's about us for the time being. So thank you for being with me. I will look forward to talking to you perhaps next week. I might start doing these webinars monthly instead of 2 monthlies. But I see lots of our friends here today. If you haven't already done a Danielcode tutorial, this is your chance. Please take it. Or if you haven't done a Danielcode tutorial for a long time and you don't know about trading time, now is the time to step up and update your skills. And that's it for me. Thank you for being with us, David. Thank you. I'm glad you enjoyed it. Lovely to have you with us, and lovely to have all of you with us. I look forward to talking to you at the same time, possibly next week. Bye-bye for now.